in the camp that over the next, rest of July into August, I think Bitcoin still has more upside to go. I'm looking at a target of 25. What does Jerome Powell say? What does he guide, considering there's no meeting till September? We know that the economic data is starting to weaken. So is he just going to tell us that it's going to be data dependent from here on out, in which case that could bring the dollar down, that could bring expectations for future rate hikes down? Or is he going to continue to say, hey, listen, we are going to keep raising at 50 basis points and go gangbusters until inflation is at X%? And then the market, I think, would react very, very poorly to that. So I think that's number one. And then GDP is for sure number two, because that's really the goalpost on what does that mean? And that's coming that day after the Fed statement. So my guess is the FOMC, Jerome Powell, will know the GDP number ahead of time. So you can almost gauge what that GDP is going to be by what he says. Do you remember back in the early 2000s with Greenspan and how everyone used to watch to see how heavy his briefcase was? That was like the determining factor. Is he going to raise rates or not? I mean, it was, same thing with Jerome Powell. You're right. One little word change can mean a lot. Yeah, so I do think that earnings so far, we've seen a good report by Netflix where they really saw a big pop. We've seen a few others that have been decent and then some that have been poor as well. So I think it's going to be a spattering, meaning there's going to be some good, some bad. I think that a lot of these tech stocks, you may see just a little bit of relief afterwards, saying, okay, it wasn't as bad as it could have been, as long as they really don't throw a real dud out there. So I'm in the camp where we could see a little bit more sideways to upside in the S&P, but I think last time we talked, I was in the same position where this is a bearish pattern developing on the S&P, which is sideways to up. And those usually 80% of the time or so, these result in another leg down in the market. And I think you have to think that, there's really no good outcome with the Fed. If they raise too aggressively, the market's not going to like it. If they step back and say, hey, it's getting too weak out there, then the markets are going to fret because they can't lower and print money anymore to save the day if we do slide into a recession. So it's really this double-edged sword, and the market just doesn't fully realize it yet. Yeah, so basically, right, so what this basically is telling you, and we saw this, by the way, from IBM. When IBM reported, I think they took a $3 billion charge due to currency issues. And essentially, when these companies are all over the world at this point. They're multinational. So if you sell your widgets in Japan or in China or in Europe, and the dollar strengthens substantially by the time you transfer that money out of yen back to dollars, you lose X amount of percent on that sale. Essentially, you're losing revenue and profit. So I think that's what she's talking about. And honestly, we've seen it already with some of these companies. My one guiding positive is that I do think the dollar in the near term has topped. And I think you will see it as a positive into next quarter. We've already seen it start to come in here. I think by next quarter, we see it down even more. Yeah, I do. I really do. Every chart that I'm looking at of the Dixie, really, the DXY, we hit this upsloping trend line, major resistance, and we should see a continued downside move. In fact, I think the last time I was on a couple weeks ago, we talked about that too, about the dollar topping out. And the dollar so far has come in, not a lot, but obviously the dollar doesn't move really crazy in a very short amount of time, or at least we all hope it doesn't. Otherwise, things are really, really in trouble. Absolutely. So basically what we have is we had a breakout on Bitcoin in the near term right here. And you saw a close above with a confirming move following it. And what we've done since then is you've kind of created this little bit of a channel of consolidation right here, which is actually, a lot of investors say, oh my goodness, we've been down, pretty much 2, 4, 5 days out of the last 6 on Bitcoin. But notice how it's a very slow kind of grind lower. Today it's getting a little bit more fast, but for the most part, this is actually what we would refer to in the technical analysis world as bullish consolidation. And so what I'm really watching is this 21.8-ish level. I want to see where it closes. It can close just below that, but you don't want to see it trade down in this range too much longer before it starts to move up. But I'm in the camp that over the next, rest of July into August, I think Bitcoin still has more upside to go. I'm looking at a target of 25.5, which is up here. And then eventually I even think we could get as high as around 28.5 or so right up here. This is kind of my max move though. This downsloping trend line comes all the way from the all-time high. So notice how these two lines are right in the same area. So I think that, again, that would be your maximum upside. Your shorter term target would be 25.5. So I am bullish near term on Bitcoin, even though I'm mid-term bearish. Yeah, so I think number one for me is a weakening dollar. I think also if the Fed on Wednesday is not as hawkish, if let's say they open the door to saying, hey, we're going to slow down, maybe we're going to pause, that would be a risk-on scenario where all of a sudden you see this risk on in the stock market, NASDAQ stocks get another leg up, and that would also lead to another move up in Bitcoin. So I think the weakening dollar would kind of coincide with that as well. We see those type of things move together. The more dovish the Fed, the more they're not tightening monetary supply, so the dollar doesn't necessarily get stronger. So for me, that's exactly it. The Fed decision Wednesday, GDP on Thursday, those would be the driving forces that would probably lift Bitcoin. Yeah, I don't read into it as a bearish signal. If anything, I kind of look at it in a contrarian view, is where you had one of the big whales holding, I think, $1 billion of Bitcoin. He unloaded a majority of his stake. And, if we've already seen that being distributed into the system, into the Bitcoin market, and investors have bought that up, maybe that's a small positive in all fairness, that the market was able to absorb that. And I know we have, some other, I think Mt. Gox might dump 150,000 Bitcoin. I want to see the market, the Bitcoin market, absorb that. Maybe it goes down a little bit, but if it can absorb those type of sells, then what it tells you is even in a bear market, there are still buyers out there, and that's a very longer term bullish sign, even if it's not a very short-term bullish sign. And when I mess up, the best thing you can do is just say, hey, listen, this is where it is. This is how we have to deal with it. And let's charge forward and correct it, or at least, move in the right direction. So I really think, the investing public, the public in general, they have to give more credit. There's more intelligence out there. People understand where things are because it's dollars and cents. And we know the price of energy, we know the price of food, we know the price of goods and homes and all these things. And it's a struggle for most people. I would say the one thing I would do if I was them, I would classify as different groups, right? So for instance, myself, I'm not in a recession myself. I mean, again, I think upper middle income, you're fine. I think it would be helpful if the government came out and said, hey, listen, if you're in this group of earners, yes, you are in a recession and we are going to do everything we can to help you, but not everyone needs the help. Us as humans abide by some rules about like the past 20 days, which is the 20-day moving average, or if it's just that we all have it on our charts now and we're all like, oh, look at that, and when you have 1 million people saying the 20 MA is being hit or it's breaking, that can psychologically trigger more selling if it's breaking versus if it's holding. So I'm not 100% sure about the underlying powers of the moving averages. It's just something that historically has always worked until it doesn't, right? Until it breaks. Probably to get headlines, I mean, the banks, right? I mean, you think about how many people are invested in crypto that are younger now, and the banks want to be on that front page with them as well. But I don't think banks have had a great track record of calling markets in. I mean, they were all bullish when we were at all-time highs, and now, they're starting to get bearish. They still haven't downgraded price targets on stocks based on earnings. They're always late to the punch, so I take it with a grain of salt. Let me point out also that when oil was at 130, Goldman was upgrading it to $200? I mean, and then we saw it drop to 93 as of the last 24 hours before it bounced. So it's just, people have to kind of think about it and put it in perspective and then really do their own research. I think this is a great example of, do your own research, look at the charts, learn the charts, and that'll guide you in a much better way than listening to anyone, including myself. I mean, everyone needs to, you never want to just follow someone blindly. You always want to understand why. I think it does in some respects. So what I look at it when it goes to cold storage, kind of like that, is that, when people bought it at 60,000 and it's down at 20 or 19 or 18, there's going to be a point where they're like, listen, I'm just going to tuck this away. I'm a long-term hodler, and then as soon as price starts to spike, which is what we've seen recently, they're all of a sudden like, oh my goodness, maybe I should bring it back, because if I can just get back to 60,000, I'll sell and break even. That would be an amazing recovery. So it's a very psychological thing, and I agree that you just can't say, okay, there's a lot of storage going on off the exchanges, so that means people are just diehard going to hold forever, because mentality and psychology of the investor can change on a dime, and you know that. I know you know that. I'm not sure, and let me just explain what I'm thinking here. So my concern with that is that every cycle, if it's the stock market, we've seen it in the stock market, but every collapse, you saw this in 2009, retail went away for years and years, and we saw this in 2000 with the dot-coms. And so the fact that hasn't happened, does that tell us that we haven't seen the full flush out yet in cryptocurrency? And the reason I say that is because if you just go back to last year, I mean, we had dropped to 30,000 before that run up to 69,000. And people got programmed to think that, hey, listen, if we drop to 30, and we're only at 20 now, which isn't so much, but maybe in 6 months we're back to 75,000, you know? And so I think that's my one concern is you haven't seen that full flush out yet, which means it may still not be over and we may need to see the retail throw up their hands and walk away. And again, I don't want that to happen because I think it's so useful and so good for retail to be involved, but it's just the way cycles work, unfortunately.